According to Forbes, Randall Kirk has amassed a fortune of $1.4 billion. He's the majority shareholder of Precigen and holds 42% of the stock in an entity which you can see right here called Third Security LLC. And when you go to the Third Security website, you can see that his profile is right here under the Our People section. And so Randall Kirk leverages Third Security LLC to help bankroll Precigen, which is currently trading at $1.10. And so Randall Kirk is a lawyer by training, but made his fortune by building out pharmaceutical companies from scratch when they have no treatments into companies that have sometimes a portfolio, but in some cases just one treatment, but a treatment which is highly sought after. And so you can see Precigen's pipeline on the screen right now, and it's this top treatment right here, pgen 2012, which is the one which is potentially going to address a significant unmet need in the market. And it's when he develops these treatments that Randall Kirk's companies then become the target of an acquisition by a larger pharmaceutical company because they want to get their hands on this new treatment that's been developed, which addresses a significant unmet need in the market. And they will come in and buy out the company at a premium price. And this is how Randall Kirk has periodically over his whole career been able to amass this fortune. You can see right here that he served as a member of the board of directors for clinical data prior to its acquisition by Forest Laboratories for $1.2 billion. And when Forest Laboratories bought clinical data, they paid $30 per share. You can see right here it states, Forest will acquire clinical data, a specialty pharmaceutical company focused on the development of first-in-class and best-in-category therapeutics for $30 per share in cash, plus contingent consideration of up to $6 per share that may be paid upon achievement of certain commercial milestones related to Vibrid. And this is because Forest Laboratories wanted to get their hands on a very specific treatment, Vibrid, which is an antidepressant, that clinical data had developed. And you can see right here, it also states that Kirk founded and became the chairman and the board of directors of New River Pharmaceuticals prior to its acquisition by Shear PLC. And you can see right here that Shear PLC bought New River Pharmaceuticals for $2.6 billion. And so Shear PLC wanted to acquire New River Pharmaceuticals because New River Pharmaceuticals had developed an ADHD drug called Vyvanse. You can see right here it states, Shear has entered into the deal which allows the firm to capture the full economic value of its new attention deficit hyperactivity disorder drug, Vyvanse. And Vyvanse was a treatment developed by Randall Kirk's team when he was spearheading and bankrolling New River Pharmaceuticals. And in that deal, Shear PLC paid $64 per share for New River Pharmaceuticals. You can see right here that Randall Kirk also served as a member of the board of directors for Skios prior to its acquisition by Johnson & Johnson. And you can see from this article right here on the New York Times that Johnson & Johnson bought Skios for $2.4 billion. And you can see from this article that it states that the purchase would help J&J, so Johnson & Johnson, boost its shrinking drug pipeline, giving it the Skios heart drug Natracor, which was approved in 2001 for acute congestive heart failure. And right here it states, buying Skios, a 22-year-old biotech company with one product on the market, gives J&J a new likely lucrative heart drug and a possible future blockbuster. And under the terms of this acquisition agreement, Skios shareholders will receive $45 for each outstanding Skios share. And so as you can see, Randall Kirk has built out his whole career and amassed a fortune by starting discovery-phased pharmaceutical companies that have no treatments at all, building them out to having a sought-after drug which addresses a significant unmet need. And he's doing this again with Precigen in the development of PRGN 2012. And so PRGN 2012, you can see here it's at phase 2. It's actually on the cusp of being approved by the FDA because it is under an accelerated pathway, which means that the FDA give it preferential treatment because it is addressing a significant unmet need in the market. And so the major catalyst coming up in 2025 for PRGN 2012 is obviously the potential approval by the FDA for the treatment, and then steps taken forward to start getting the product commercialized and ready to be taken to market as well. But it's important to know that investing in biotech and pharmaceutical companies is notoriously risky. As you've seen, the stock prices can fluctuate massively. And the vast majority of biotech and pharma companies, they go bankrupt because it can take, up to 15 years in some cases for any one treatment to go through all of the stages, if you like, the stages from clinical research all the way through the phases to phase 3, and then finally get approved by the FDA. And a lot of times these treatments don't get through certain phases, they get rejected. And so PRGN 2012 is being developed to address a significant unmet need in the market for a condition known as RRP. And you can see from this paper, which is on the PubMed site, that RRP, or recurrent respiratory papillomatosis, a 2020 perspective, you can see right here it states that the initial 2-year direct cost of treating RRP can be as high as $76,000. And so you can see from this paper, which is titled The Cost of Treating RRP in Commercially Insured and Medicaid Patients, that the first 2 years medical costs an adult onset RRP among commercially insured and Medicaid population were approximately $5,000 to $11,000 for adults. And so if approved by the FDA, PRGN 2012 will provide an easily administered, cost-effective solution.